All right, so I'm with Mukta ma'am, and we are going to learn noiseless charts, point and figure charts. It's a very interesting topic. Generally, हम लोग candlesticks पे ही सब कुछ देखते हैं, सब कुछ करते हैं. It's a new kind of thing. It's a new experience for me as well. मैंने उनको देखा है. I know वो खूब सारे X's and zeros बनते हैं, but I've never gotten around to actually studying कि what it is and how you can actually trade on point and figure charts and how can you do noiseless trading. So, without any further ado, ma'am, please, the mic is all yours. Eager to learn from you, ma'am.
Great. Thank you so much for having me on this platform. It's wonderful to connect with so many people. And since you have such a huge database, I would love to, reach out to maximum people and tell them how beautiful or how objective the point and figure charts are. So noiseless charts are basically the point and figure charts where we have the X and the O's, the tic tacs that we see. And it's very simple kind of a strategy that I follow right now in markets to trade futures, options. So all kinds of segments from the market can be traded, including your currency, your MCX and your crude and everything can be traded. I trade futures and options and I trade cash segment using the point and figure chart very often. And basically my chart filtering and everything happens on the point and figure chart. And I pick my trades using the simple objective techniques that we have in point and figure. So I would like to take you to the platform that I use for studying the point and figure chart. So we can have a live platform that you can see. Of course, markets are closed right now, but the charts you can see are from my software directly. So we will just discuss briefly how the point and figure charts looks like and how we can use it for our trading and what kind of system or what kind of a setup that we can look for in trading point and figure charts.
Awesome.
So let me share my screen. This is a software which I use for trading point and figure charts. So I'll just open first our simple Nifty chart. Let me just open our Nifty chart and let's see what Nifty is telling us on point and figure chart. So in point and figure, we have these X and O's. If you see, this entire thing is where I can just zoom it in. Yeah. So you can see all these columns. You can see my screen, right?
Yes, I can see your screen, ma'am.
So for a bullish action in point and figure chart, we get a X printed. So X getting printed one after another. And for a bearish action or when the prices are correcting or falling, that is where you get O's which are printed. So it is very simple for me to discriminate whether the price is bullish or bearish at that point in time. Like today we have the O's which have started getting printed in the last column that you can see here. So we can know that today was a kind of a bearish activity that we have seen in the markets also today. We almost had a bearish engulf on the daily chart,
Right,
which is happening in Nifty. So these charts, we have X getting printed and O getting printed. Every X, you can see here on the left hand side, we have something called as a box size. Like X getting printed, but at what levels every X will get printed, or what level we can flip into a column of O or from column of O to column of X. In point and figure, we have nothing other than X and O's. You can see on that entire frame that we just have X followed by O and a column of O will be followed by column of X. There is nothing else which is there on the point and figure chart. So it is easy for me to first, that brings in objectivity to me that I exactly know what prices are doing. Secondly, there is something called as box size. Here on the top left corner, you can see that I have defined a box size of 0.1%. So what does that essentially mean is every X, like if I'm in the column of X, every X continues, in the next X gets plotted after one X is plotted, the next X is plotted when the price moves by 0.1%. If I am in the column of O, price gets printed, every O gets printed one below the other when the prices come down by 0.1%. Right? So simply every continuation box in the column of X or whichever column that you are gets printed after every 0.1% move in that particular, like in case of Nifty, we use the 0.1% box. For in case of Bank Nifty, we use a little bigger box size. For stocks, we use a different box size. But there is a set rule as to which box size to be used for particular, indices and for the cash stocks. Now, after that 0.1, you see multiplied by 3, which is written. So what does that mean? When I am in the column of O, I will flip into the column of X when 3 boxes, the price reverses by 3 boxes. So price increases by 3 boxes. Each box size we have defined as 0.1%. So a rise by 0.3% in Nifty will flip the prices from column of O to column of X. Right? If I'm in the column of X, I will flip into column of O when the price drops by 0.3%. So today, essentially yesterday we had closed at a level of somewhere like 18,790 if you see. And today prices dropped by 0.3% and that's why we have flipped in the column of O today. Here when I'm pointing on at this particular column, you can see on the right hand side commentary, I get the high and the low dates also. That the low started from the on the 5th of June when the prices flipped from column of O to column of X, and from column of X today they have flipped into column of O because the price is corrected by 0.3%. Now I know when I'm in this particular column, in the commentary box you can see CR written, that is column reversal. That means absolute number wise 0.3% rise, I will flip into column of X. So where is 0.3% rise? That level is 18,790.
Right.
Okay. So again, that will open the targets upwards. So this is the basic construction of a point and figure chart. Now let's look at something called as a pattern. For us, for in point and figure, it is all process oriented, and it is all basically I trade it more of process oriented and objective kind of a trading system where I talk about a setup. For a setup, I have 2 rules. I have to identify the trend and I have to identify the pattern. Identification of trend happens with the help of an indicator, which is called as must indicator. These green broad lines which you can see on below the price, they are a that is called as a must indicator. It is a combination. Must stands for a combination of MA, moving average 10, and ST is the super trend 10 by 3. So only difference out here is it will be 10. It won't be a 10 period moving average. It will be a 10 column moving average. And in point and figure, it is one of the most important characteristic of point and figure that unless the price moves against the ongoing trend, like here it was bullish trend. So unless it reversed into column of O, it continues in that same column until and unless the price drops by 0.3%. So each column may last for 2 days, 3 days, 4 days. Like in this case, it lasted for 3 days. On the right hand panel, you can see it started on the 5th of June and lasted till the 7th of June. So this is a swing of 3 days that we are looking at, which is one of the most important characteristic of point and figure. And when we are talking about MA, that is the moving average of 10 columns. So 10 columns behind. So like in this particular case, you can see the low date is 24th of April and the high date is 4th of May. So for that period of time, prices never dropped by 0.3% to flip into column of O. That was the strength of the trend that we had. So each column is representing a trend. Like in this particular bearish column, you can see the trend lasted from 9th of March to the 15th of March. So consecutively prices corrected by 0.1% and the trend continued in the downward direction without reversing by even 0.3%. So moving average, which is of 10 period, and super trend is also of 10/3. That comprises this must indicator. And when prices are above the must indicator, the trend is considered bullish. When they are below the must indicator, the trend is considered as bearish. So easy discrimination again for analyzing the trend, which is a part of your setup. So the first thing is taken care of, like price above the must indicator is bullish, below the must indicator is bearish. When it is above the uh, must indicator, indicating that the trend is bullish, I look for bullish patterns. So a basic bullish pattern is a double top buy, wherein prices are in a particular column. Something, a pattern, something like this. Let me grab a pen. Wherein price comes to one particular resistance, it turns around from that particular level. So it approaches a resistance level, flips a little, so pulls back a little, and again comes to the same level of the previous resistance and breaks it this time. So this pattern is called as a double top buy. Something like that you see here. Prices are in column of X. They pull back a little, again come to the same level of X and break out. So this is the basic pattern in point and figure chart, which is called as double top buy. A double top buy is a bullish pattern. Similarly, a double bottom sell is a bearish pattern, wherein prices are first in the column of O. They pull back a little and again come to the same support, and this time break that support. So the support getting broken is a typical characteristic that you see in a bearish trend. Something like this. Prices are in the column of O, pull back a little, and then break down and break out in the form of a double bottom sell. So a double top buy is a bullish pattern. Double bottom sell is a bearish pattern. There are few more patterns which are there, like broadening, triangle, ziddi bull, ziddi bear patterns, or numerous patterns are there in point and figure chart also. It will take, a long session of about 2 hours to explain each pattern. So I'll just touching upon the basic pattern, which is called as a daily double top buy and a double bottom sell, which indicates a bullish and a bearish pattern. Let's look at another example, maybe for a bearish example. This is a chart of Kotak Bank. You can see prices are below the must indicator. And when you have this kind of a column, you can see the number of O's, the count is coming out here on the right-hand panel. There are 19 O's consecutively plotted in one single direction, indicating that there is a bearish momentum. This is called as an anchor column, a bearish anchor column, because there are O's in this. A bullish anchor column is where you have consecutively 15 or more X's plotted in one single column without the price reversing even a bit. Similarly, here there are more than 15 O's, indicating that this is a bearish anchor column below the must cloud. A small pullback, and you can see this double bottom sell which happened at 1932, indicating that there is a consecutively bearishness right now in Kotak Bank that we can see. And this is a 1 minute chart. So the chart gets locked at the end of every minute, whatever, the print is happening in market. Now we can also check out the targets that you get using this particular column, because there are some rules to find the targets in point and figure chart. Now, when I am taking double bottom sell as my stop loss on a 1 minute time frame, 0.15% box size. Reversal box size usually is kept universal at 3. Usually when I get an anchor column, I put high pole or a low pole. So here in case low pole, what does low pole mean? Low pole means this entire column getting retraced by 50% of the entire move. So this high, which is at, if you see on the right hand panel, you have the high pole and the low pole values which come up. When I point to this particular column, the double bottom sell is at 1932 and the low pole gets formed at 1964, which will be our stop loss. As a disciplined trader, I always believe that whenever you take a trade, we should always know where we want to exit that particular trade. So the exit door should be always known to us, which will be if the trend doesn't work in my favor, I should know where I have to exit this particular trade. So 1965 is where you have a stop loss for this, and the target indicated is about 1877 for Kotak Bank. Let's look at another chart, maybe Axis Bank. So Axis Bank, if you see on the daily chart, let me just get rid of something. It has formed this double top buy day before yesterday and a huge bullish anchor column. You can see this anchor column. This is again a 1 minute 0.15% chart. A huge anchor column which has 36 X's printed in one single row. What does that mean? It's a strong bullish action. Now the high pole, which is 50% of the retracement of this entire move, lies at 955, which is a strong support for Axis Bank going ahead and reversing. Column reversal, if it happens above 971 level, you can see all the values get printed out here. And when I'm in column of O, I already know where the column reversal is because we have a defined box size out here, which tells me that 0.45% upside move, the prices will flip from the column of O to column of X, right? This is the beauty of point and figure actually. So when I have a view about a particular trading setup, like in this case, a daily chart, let's look at the daily chart of Axis Bank. Let me get rid of this. So the daily chart of Axis Bank, prices are above the musk cloud. You can see this musk cloud turning green out here. And right now they are cooling off in the column of O. The high pole for this particular anchor column level is at 949 level. So that is a strong support at 949 to 955 for Axis Bank. A column reversal here happens at 970. When I'm pointing out here, it's at 974 on the right hand commentary. You can see CR value, which tells us that above 974, we can get a continuation move. That means this column of O will flip into column of X. And the double top buy will happen above the level of 979. So all the levels are known to be before even the prices are flipping. Now, since my view is bullish, because the trend is bullish, I would be already prepared with my trading setup. Okay, fine. If the prices are closing above 979, yes, this is a nice setup for a bullish trend and a continuation. If you can see, this is a nice sub formation also, which has happened at the all-time highs of Axis Bank. And prices may consolidate and then break out after that. So we know the breakout levels in advance, which is the beauty of point and figure chart. And the objectivity that, you analyze the trend and you analyze the setup accordingly. So you analyze the trend and you analyze the pattern to find the setup. So a bullish trend, a bullish pattern, a bearish trend, a bearish pattern. Simple discrimination of the trade setups, and you are sorted with the point and figure chart. And that is why this objectivity, wherein I know the levels well in advance, that helps me to be prepared with my trade setups. And secondly, I also know exactly where the trend would reverse, where exactly a breakout trade is happening. So that adds a lot of confidence in trading and gives me a hell of a objectivity in this entire trading setup. So this is what basically point and figure charts are all about. And that's how I trade using the point and figure chart. In fact, similar setups you can find even in options chart. So let's see Nifty 18,700 put for today, which usually for options, we use a 1% box size for the intraday trading setups. If you see here, if I point out the intraday separator. All right. So yeah, so this is the intraday separator. 3% box size or 1% box size. 3% is what we use for a larger time frame, and 1% is the box size which is used for intraday setup. So here you can see, usually I use a triple moving average out here. So let me add a triple moving average. I don't use a musk cloud. The triple moving average gives me a trading idea as to which side the trade is catching up and which trend is catching up. So here you can see huge bullish anchor columns giving you that double top buy. And then again, you can keep trailing your stop loss. Again, a double top buy happened, a huge anchor column happened, and eventually the prices, continued in the bearish direction the whole day. In fact, such bearish trend, if you start getting indication on your charts, even option selling can be done using these particular trading strategies, wherein you have a beautiful trend TMAs aligned in this particular fashion. A double bottom sell will be your entry, and you can continue riding the trend on the downward side till you get a double top buy above the moving average. So a double top buy above the moving average is your buy signal for this put, and a double bottom sell below the TMA. TMAs have to be nicely aligned like this. They have to spread out into a alignment of 10, 15, and 20 TMA that we use. And then just ride the trend on the bearish side or the bullish side, whichever signal that you are getting. Today being the expiry day, there was a lot of action which took place in the particular option. But on Monday to Thursday, Monday to Wednesday and the Fridays, wherein the trend is a little smoother, you will be able to catch up trends like this in the market, and they are wonderful trading opportunity for option sellers or option buyers, both, whoever, whichever direction you want to trade or whichever direction you are comfortable. I'm so clear about this that at this particular point where I'm selling a particular option, my stop loss is above the TMA, and a clearly defined system is what I have designed using the point and figure charts. So, any questions from your end? We can have the questions.
Right. Awesome. So just so I understand it correctly, basically, one, there is no concept of time in this chart, right, ma'am?
Yes.
Like any typical chart. So the axes keep getting drawn one stack over the other till we have a bullish momentum. When and as we saw, जब वो I think 0.1 if we have kept, so जब 0.3 का आ जाएगा तो trend would reverse and एक O print हो जाएगा next column में.
Correct. In this case, like in Axis Bank, in cash charts or in futures daily charts, we use 0.25% and the reversal box size is 3. So every X or every O gets plotted continues with when the price moves of Axis Bank by 0.25% and reverses by 0.75%.
Right. Awesome.
Yeah.
And so next is so targets get defined for us whenever the pattern when the trend has changed and we get double top. So if we are bullish, so jab double top sell aata hai, at that point of time we'll have our exit as a target, and otherwise we'll continue to ride the momentum. And similarly for stop loss, if it's stop loss भी इस तरीके से if the trend reverses, then also so stop loss and targets kind of trailing stop loss चलता है target के लिए भी, I suppose.
Absolutely. When double top buy is your entry, double bottom sell is your stop loss. When you are short, you're taking a double bottom sell as your shorting entry. That time double top buy is your stop loss.
Right. Awesome. So as I can see in this one, so basically since I'm double, अगर मैंने double top buy किया है and then I'm waiting for double bottom sell, so maximum मेरा जो रह सकता है, so is there a rough, if you can tell me some risk to reward ratio उसमें क्या रहता है? Risk तो I mean reward तो I think unlimited उसमें कितना भी जा सकता है, but typical risk to reward, what do you look at?
Usually we get a risk to reward of about 1:3. But now here also there is a small, caveat that if it's a huge anchor column, like in this particular case, we had a big move wherein 32 X's are getting plotted in one single column. In such a case, if you get a small cool off, we usually use high pole or low pole as our stop losses. So when this entire move, if you have captured, then your high pole, that is about 900, will be a stop loss, and then continuation in the trend would be again, now the trail would be here initially it was 901, now the trail is at 921, which is the double bottom sell level of this particular column of O. So if prices break below 921, in that case, the stop loss gets triggered on a daily chart. Usually for trading futures, I prefer using a 0.15% 1 minute chart. So 0.15% 1 minute chart is what I usually use for trading futures.
Right.
Yeah. So this is that 0.15%. Simple discrimination. Daily में अगर मेरा trend bullish है, I prefer taking bullish trades on the lower box size. So something like we use for candlesticks also. कि अगर weekly पे bullish है तो try to take bullish trades on daily. या daily पे bullish है तो we try to take bullish trades on hourly. Similarly, we just reduce the box size here so that we come down to a lower box size and we can take a trade accordingly. Like in this case, where the double top buy has happened, usually when it is 0.15%, 1 minute chart, I use the lower end of the super trend as my stop loss. So when I get a double top buy out here, initially hypo, of course, because this is a huge anchor column, but as the trend rises, this super trend and the moving average, the must indicator is also going to keep on rising. So that will help me to trail the stop loss closer and closer to the price activity as per the price activity.
Right. Awesome. Awesome. And generally, ma'am, what is the time frame that you typically like? I think we saw daily, we saw 1 minute chart as well. What is the typical time frame that you use these charts for?
Okay, so if you have to take a positional trade, we should use a 0.25% daily chart. Okay. If you're looking for picking up a trade in a small cap or a mid cap, I would prefer the box size to be 0.5% on the daily. On a normal F&O script, or you are trading something from Nifty 50 or Nifty, the F&O basket, then 0.25% on the daily chart for positional trading. If you're doing something like a scalping or a quick trade wherein you want to be a BTST kind of a trade, or something like STBT kind of a trade, or just buy today and over next 2-3 days, yeah, target based trading. Like in this particular case, when I got a double top buy, I know that the target for this is 972. So if my target is achieved, I'm out of the trade. So there are various types of traders, and this kind of, it depends on what kind of trading system you adopt to. So if you're a target-based trader, you're out at 972. You have got a double top buy somewhere out here at the level of 931 to 972. That's excellent money for trading a futures derivative segment in the futures. So a superb risk to reward that you can get when you are taking a double top buy at 931. The super trend, which is at 907, you can see here on the right hand panel. When I point here, 907 was your stop loss, and about 23 points of a risk and about 50 points, 60 points of a reward on upside. So on a usual basis, when you ask the risk to reward kind of a setup, so about 1:2, 1:3 kind of a risk reward that you are able to take trades in point and figure.
Right. Awesome. Awesome. Unfortunately, we are running out of time, but this was very enlightening. This was absolutely awesome, ma'am. I would very, very strongly request you to please come back again, and we would love to learn more about the trends that are there. You said there's a lot more. बहुत सारे trends हैं, बहुत सारे patterns हैं which are left out. So this was just part one, and you'll be kind enough to tell us more next time.
Yes, surely we'll stay connected and we'll keep updating. There's lots to learn in point and figure chart, and I would love the viewers to be benefited with the noiseless chart.